Hey guys, it's Al Eberol with Financial Intelligence Training. It's June 13th, Wednesday. It's 2018, and I am back in the lovely city of Chicago, and the weather for a change is absolutely glorious here. If you've watched me on the post before, you know that when I come up, I do a little bit of whining about how cold it is coming up from Fort Lauderdale. Anyways, tomorrow, Thursday, marks the start of the World Cup. So for all you soccer fans out there like me, we are teeming with excitement for the start of that first kickoff, except for all you Italy folks. I'm sorry your team didn't make it. Hey, U.S. men's national team didn't make it either. Now, a little side story that I want to share real quick. Today on my flight up here, I had the great fortune, luck, whatever word you want to use, of flying up with one of my all-time football favorites, the legend, the man himself, Dan Marino. Actually had an opportunity to chat with him when we boarded on the flight. What a cool guy. Really fun conversation. Good luck on your golf outing, Dan. Thanks for chatting with me today. So, last week on the post, what did I talk about? I said that this week we'd have a lot of information coming at us. We had the G7 over the weekend. We had the summit that was happening. So let me touch on those quickly. I joked on Friday's post that let the needless banter begin in reference to the G7. And guys, I was kidding when I said that. I didn't really think is exactly what would materialize. And it did. On his flight to Singapore from the summit, our president had to go out there and say something negative about the Canadian president and called off everything there. Of course, imposing those tariffs. And listen, here was a major diss, if you will, to the president, our Canadian neighbors in Canada nonetheless. That's what I was talking about, needless banter, as a joke, and sure enough, it materialized. I also talked about the summit, and if you follow me on Twitter, you know I've been really hoping for something good there. I thought that this would be terrific, and I was hoping that the early enthusiasm wouldn't fade. So, the summit came, it happened, and it's over. And what did we get? A pledge. What does that mean? I have no idea what it means. But if you're on the left, you think it's absolutely ludicrous. If you're on the right, hey man, that's Nobel Prize winning. For me, right down the middle, I think it's a great start. I think this is awesome progress, and I hope, as I've noted on Twitter and as I said on these posts, that the early enthusiasm doesn't fade and that actually something good comes out of it. It's too early to tell in my opinion, but let's keep that enthusiasm open for the opportunity. Too early to tell. We'll see what happens. Now, let's shift some attention to the markets. Today, we had a rate hike. If you follow me on Twitter, you may have noted that I thought perhaps, maybe, we could see a 50 bip hike as opposed to 25. Now, as outlandish of a statement as that was, the reason why I thought about it was, let's think about what we've got going on. Full employment, we're at 3.8% on our unemployment rate. If we go all the way back to 2000, that's the last time we hit 3.8. Where were Fed funds? 6%, right? So the three times I've noted on a previous post that we had unemployment sub 4% were the 50s, the 60s, and 2000, and each of those periods were followed with a recession. Now, the 2000 recession came on the heels of a rate hike from Greenspan, but the cure for that was lowering rates. So my thought process of jumping 50 bips was, if we hit recessionary pressures due to the full inflation rate and inflationary pressures coming in here, the countermeasure that might be to once again lower rates. Well, you got to raise from here to be able to lower in the future. You know, we're at 2 versus the 6 that we were in 2000. Now, when we look at the markets, they don't care. They don't care about the G7. They don't care about the summit. They don't even care about the rate hike. We've had a very quiet week, which is actually nice for a change. I think the Dow was up maybe 1 yesterday. Right now, as of this recording, we are literally unched, sharply unched, meaning unchanged in the S&P 500 on this rate hike. So, saying that, we have the Russell at all-time highs. So this divergence between the betas and the bigs continues with the outperformance in the betas and growth names, and we are starting to see a little bit of rotation that's right there. Now, I want to end this post by reminding you to look at the financials. Why? Because if you're a financial intelligence training student, you understand how important I think the financials are to the overall health of the market. And they are ugly, and they remain ugly, and that's something that I've been talking about. Not 2007 ugly, but ugly just the same. Go back and look at Morgan Stanley, like I said. Look at Goldman, look at Citi. They still remain under their 200-day moving averages. And then, go back and look at JPM, because I talked about that and I keep talking about it, and look at how it's dancing nicely on its 50-day moving average. Leadership, the financials, two different things, two important topics that we cover in the financial intelligence training course, and why they are so relevant to the market, especially if you are trading, guys. And if you are, please remember, stock and stock options involves a substantial degree of risk. It's not suitable for all investors. And if you like to look at charts like me, past performance is not necessarily indicative of future results. If you want to learn more about what I'm talking about, I'm hosting a special webinar tomorrow. Go to prospertrading.com, register for my webinar, or check me out on Twitter at @AlAbaroa. Thanks for watching today, guys.